let's go up to 30,000 feet here, because we've been splitting hairs, parsing words, trying to figure out where we are. Has anything changed since the last time you and I spoke when it comes to reopening the strait and the way the market should be interpreting all of this messaging?
It sure has, to the tune of we're working toward a 1 billion barrel shortfall, cumulative, since the war began. So let's just look at the math. Before the war, it was about a 104 million barrel a day world market for oil. And we're missing now about 14 million barrels a day that's been shut in for several months. So that's how we get toward that billion barrel figure. If your viewers are savvy business people. If I told you you're running a business or a P&L and you're going to be spending more than 100 and you're only going to be taking in 90, that's a problem. That's going to raise flags. How are we doing it? It's just simple deficit spending. We are borrowing from inventories around the world, oil that's held by industry, oil that's held by governments, like in our Strategic Petroleum Reserve, in order to spend down those inventories and infill the shortfall of oil supply. But it can't last forever, because just like the dollars in a rainy day savings fund, you can only spend them once.
Well, so when we consider the prospect here of potentially, if the terms of this particular agreement, as we understand it, are agreed to, it would mean that the Strait of Hormuz is going to reopen unrestricted. Within 30 days, Iran would move mines out of the strait. How quickly then does it translate to a resumption of the kind of oil flows that we were seeing prior to this conflict, or can it ever reach those levels again?
So if you have those starting assumptions, where I'm a bit dubious, I think that it will still take some period of many months in order to restore production levels to where they were before and get shipping sufficiently prepared to start moving barrels in and out of the region like before the war. But we're doing a lot of work to talk about the potential for a quick solution here, and especially the idea of like toll-free shipping through the Strait of Hormuz. I feel like the old metaphor, you can't put the toothpaste back in the tube. Tehran knows that it has this tremendous leverage over the world economy, even over some decision-making, arguably here in this town. It's not likely going to cede that new authority, even with an agreement.
So you think the tolls are here to stay?
I think that some Iranian influence over who ships and who doesn't ship through Hormuz is probably here to stay.
When are the buffers gone? Is it mid-June? Is it by the 4th of July? When are we down to paycheck in the oil market?
Well, that's a great question. It probably is a summertime event, and we're spending down these inventories, as I said. The way the mechanics work is there's this phenomenon called tank bottoms. And if you imagine you're drinking your drink with your straw, you can't get every last drop, right? You have to have some residual at the bottom. Maybe it's a retail metaphor for an industry problem. But the bottom line is you're going to get to those operating minimums probably in summertime with the kind of drawdown rates that we're seeing, which are very aggressive, again, both on the industry side, but also the strategic reserves. For a couple of weeks in May, just this month, the United States drew down like 41 million barrels between industry and Strategic Petroleum Reserve. We are providing a tremendous lifeline to the world market to manage through this crisis.
Well, so as we consider our own reserves, knowing the Strategic Petroleum Reserve obviously was depleted starting back in 2022 after Russia invaded Ukraine, and we've seen a rebuying effort, but we still have a long way to go. What does it look like for other countries ex the United States? We know China had a larger buffer than most. Do they have a longer time window? Well,
China's in a really interesting position to manage their interests through this crisis, largely owing to that huge stockpile that they've built in recent years, 1.4 billion barrels in total between industry and government. That means that they don't have to buy the high. And really interestingly, we've seen them slash the volume of crude imports. They were bringing in 11 plus million barrels per day before the war. They're down to 9 now, and it looks like it's going to be trending even lower. That's the luxury of not having to buy the high. So it's really the United States and China that are largely resupplying, giving this life extension to the global oil market, and again, the world economy.
So how do we rationalize what I think we can call optimism in the energy market? Every time there's a whiff of a deal, oil prices decline. We're back below 100 WTI and Brent, as we mentioned. If I'm an oil trader listening to you, I don't make sense of this.
Well, if you're a futures trader, I think you're doing exactly what you're supposed to do, which is not express a bullish position on oil fundamentals through a long futures position. It just doesn't pay, because there's this put out there, and any next tweet or post could send prices 5, 10 plus % lower. Who wants to hold that position? So you got to find another way to express that fundamental bullish risk.
Well, when we consider then the prospect of where prices are going to go. If you're talking about us being potentially months away from inventory depletion and that going to create a real supply problem, do we not get to the demand problem first if prices remain at least at the levels that they are at now? Is there not going to be somewhat of a correction due to demand destruction?
Well, part of this grace period is we're not getting the full market signal for demand to pull back. We saw at the beginning of the crisis when prices were really spiking, some of the countries in Southeast Asia did start to limit demand, work from home, other similar mandates, but it didn't really take off worldwide. And when you have this resupply going on, it's not really necessary everywhere. So until you get to those really high prices that would cause people to pull back on oil use, you're not going to get the proper signal to rebalance the market lower.
Interesting. We haven't talked about Venezuela much. How much oil are we getting from Venezuela? Obviously, we're keeping a lot of oil from getting to Cuba. But is that heavy crude helping to make the difference at all with what's happened in the Middle East?
You know, every drop counts right now, but it's still a drop in the bucket from Venezuela. The good news is we're back up to substantially 1 million barrels per day. And we had come down when we started the quarantine last December. So that's great that we're back up there. And we probably will be able to increase supply from Venezuela by a couple, maybe 300,000 barrels a day in the next year or two. But we have a 14 million barrel a day deficit. So do the math.